Welcome to ForexTV.com. Today is Monday, September 29th. I'm Kathleen Reddington with your New York Forex Market Buzz. The dollar is stronger on the euro and the sterling, but fell against the yen. And now for a look at the latest headlines from the CEP News Desk. Congressional lawmakers have reached an agreement on the final details of the $700 billion bailout package. If it's passed, the agreement will release $250 billion of funding immediately. The bill calls for $700 billion of funding to be delivered in stages. The Bank of Canada announced this morning that it was increasing its swap facility with the U.S. Federal Reserve. It has upped the figure to $30 billion. In an effort to continue providing funding to the financial system, similar agreements from major banks worldwide have also been made. This brings the Fed's total FX swap arrangements to $640 billion. The FDIC, the Federal Reserve, and the U.S. Treasury facilitated the acquisition of Wachovia by Citigroup this morning. Citigroup will acquire the bulk of Wachovia's assets and liabilities while assuming senior and subordinated debt. U.S. Treasury Secretary Henry Paulson said the failure of Wachovia posed a systemic risk to the U.S. economy and praised the actions of the FDIC. Personal income gained for August up to 0.5% over the expected 0.2%. Total personal spending was flat this month and comprises roughly 70% of the U.S. GDP. Personal spending was below expectations for a 0.2% gain. And the core PCE index for the U.S. gained by 0.2% in August, which met expectations. There is a year-over-year change of 2.6%. Today, we're joined by Stephen Leahy, president of Back Bay FX. Hi, Stephen. How are you today?
Good afternoon. I'm doing quite well up here. Interesting day on the desk.
It definitely is an interesting day. In the U.S. already, this morning we've seen the Dow slip triple digits at the start of trading. Personal spending came in at 0.0, and Wachovia was bought by Citi. But the dollar was trading stronger against the majors. Is it a fluke, or have we just kind of got used to the bad news? And what's your strategy going forward for the dollar today?
I think that when you ask, is it a fluke, I would dare call it a bit of, I kind of view it as a bit of a wipeout trade. Clearly, for the previous week, ever since the $700 billion bailout plan was announced, the U.S. dollar was getting weaker by the moment almost. Here today, we had some news that seemingly should have pushed it in the same direction, but went the other way, pretty strong and hard starting last night at the open. And I tend to think of this move lower in euro dollar or higher in dollar is a bit of a wipeout move, kind of taking some of the smaller hands out of the market. In the short term, over the course of today and for the next few days here, we are still looking to sell dollars at every opportunity we can, mostly versus the majors. I think we can still buy euro dollar and buy sterling dollar. The question is just, obviously on an intraday basis, where the heck do you go ahead and do that?
All right, now kind of continuing along the same thread, the pound actually dropped the most against the dollar in 15 years, and the euro was also weakened this morning, especially as European banks start to join in on the bank bailout thing we've got going on here in the U.S. The Eurozone also saw some more negative consumer confidence news. What is your strategy going to be for the sterling and the euro going forward?
Sterling, euro, as I mentioned, I think that it's really almost a race to see who's the worst currency out there. Is it dollar? Is it the pound sterling? Or is it the euro? And so we do think at this point, U.S. is still going to lead the way a little bit lower here. Specifically, as I mentioned, for euro dollar, we're looking for opportunities to buy. Sterling dollar as well, although I will say we also really favor the cross as we have for quite some time. Euro sterling as a pair, we've seen a heck of a lot more increased volatility in the last 6 months than the previous 7 or 8 years I've been doing this. And so euro sterling has become more of a intraday tradable vehicle. We do like going long. We think fundamentally the UK has to cut their rates in the long term much more drastically than the European Union will. That being said, I'll comment on today's move significantly lower in sterling dollar. Going back to what we spoke about last week is we see some of the cross pairs, euro yen and specifically sterling yen, being correlated with world equity markets. A pretty high correlation. And so as soon as the Asian markets started dropping early this morning, or I should say late last night, taking sterling yen down much lower, we saw sterling dollar moving lower, and we think there's a bit of a drag down effect on that sterling dollar, and that's why we think we can buy it again down here.
All right, and let's change gears a little bit. For commodity currencies, the loonie and the Aussie, they seem to be pretty brave in the overnight. The Aussie showed some resiliency against the dollar before moving lower, even though gold was lower in the overnight, and the dollar-loonie pair was actually able to break through what had traded all last week, even though there's speculation for a lower oil demand moving forward. What are your thoughts on these commodity-based currencies?
Similarly, as you mentioned, commodity-based, and you mentioned oil trading lower, we kind of foresee, as much as global growth seems to be slowing, or is slowing, whatever numbers you choose to read, we do think that there's still going to be some re-leveraging of some of the positions in oil, and kind of from a trading and market psychology perspective, one last try to bring a lot of commodities higher. And so we do think that Aussie dollar and Canadian dollar both can move higher based off of that. But as you mentioned, they are tied heavily to the commodities. As you said, Aussie dollar didn't get hurt quite as bad as some of the other currencies overnight last night, so we think that that's showing signs of a chance for further strength in Canadian dollar and Aussie dollar. From a short-term intraday look, we don't do any short-term trades on those currency pairs, but fundamentally, for a longer-term view, we've got small positions and we're long both.
All right, and finally, I just want to touch back on what you were just speaking about before. The yen was seemingly driven by the equities, at least in the overnight, and at first moving lower, but then moving higher. And we've seen the yen gain a bit on the euro and the pound. What are you going to recommend for the yen?
Again, back to what we have spoken about before, we like watching sterling yen and euro yen as a barometer for a kind of global risk appetite, and that leads us to our positions on dollar yen. We do think equities have further to go. I think there's going to be more risk aversion. We think sterling yen is going to go back and check those lows in the low 180s once again, and therefore we think that's going to drag dollar yen down much lower. And so in terms of dollar yen, again, we're looking for opportunities to sell. It's pretty clear, as I kind of summarize what we've been talking about here today, we are looking for softer dollar days ahead, and so it's just a question of picking your point of entry on whatever currency pair you're going to go, where we're going to get short dollars for some short-term trades over the next 48 hours or so.
All right, Stephen, it's definitely been a hectic day. Thanks for joining us.
Quite welcome, Kathleen. Thanks for having me on.
This has been your New York Forex Market Buzz with Stephen Leahy, president of Back Bay FX. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.